Good afternoon, everybody. So, update on California Fair Plan. We've all kind of been expecting this, but it is coming in on 1/1 of 21. There is going to be a rate increase of 15% overall. So, what that means, again, as a base rate, is that some brush territories might see higher than a 15% increase. Some brush territories might see smaller than a 15% increase, but the overall percentage of the rate increase is going to be 15%. Please understand that the Fair Plan has held off as long as they can to do this increase, but they are being overly saturated in this market with risk, and they are facing a lot of claims. And unfortunately, when a company faces a lot of claims, especially this type of company, they do need to take rate to collect more premiums to be able to pay out the claims that they're going to be experiencing. Now, on the flip side of this, we've been working really hard with the California Fair Plan to come up with alternate ways to offset these increases that we're going to see. And one of them that they took heart to and implemented is what is called extended dwelling coverage. Now, this is different than an extended replacement cost coverage that you see on a traditional policy, but this will be an endorsement that we can add on that 25% of your dwelling limit will be available if you need some additional coverage at the time of a loss. This can be applied to not only replacement cost policies, but manufactured and mobile home policies, as well as homes that do not have the roof 25 years or younger and they are facing an actual cash value policy. This is going to give you back a little bit additional coverage under those policies. So what this means for those of you that really took an interest in your protection on your home and inflated your dwelling coverage to include that 25% or 50% extended coverage for demand surge, you are going to, in most cases, be able to lower some of that back down because you're going to have this extra endorsement that's available to you in that 25% of coverage. So that will bring your premiums down and will to help offset this 15% increase, as well as they have added deeper credits to your deductible options. So if you, instead of right now where there was very little savings for you to go from a $2,500 deductible to a $10,000 deductible, they are adding a couple more deductible options like a $15,000, a $25,000, a $50,000, and those are going to have greater deductible credits in between each level. So the more of the risk that you take on, the less your premiums are going to be. So it is not all bad news. I know that it's really difficult. A lot of you guys are at the brink of you being able to afford the California Fair Plan as it is. But hopefully these other additional enhancements to this program are going to help offset some of that hurt for you guys. Be very vigilant in calling your insurance agents if you have an insurance policy with California Fair Plan that is going to renew on 1/1/21 or later, and you know that you had inflated that demand surge coverage onto your policy. Have that conversation with your agent. Look at ways that you can offset those by reducing some of that extra coverage that you had to put on there to make sure that you rebuild. So I hope that this helps. I know already that there's been some agents that have posted the battle cry out there, and it has already started to panic some people without knowing all of the options that are going to be available through these changes. So as always, any questions, any concerns, reach out to us here at Intrinsic Insurance, 916-585-8184. Have a great day.